Derivatives trading involves substantial risk of loss and is not suitable for all investors. Patent future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Thursday. We've got some initial jobless claims coming up here. I think that these jobs numbers are going to continue to be still pretty important, so we're going to want to pay attention to that. And also, don't we get or is PPI another day? Don't we get PPI today? We do. We get PPI, US core PPI, month over month, expected results, spot 2. Let's just come over here real quick, take a look at the chart so you can see here in ZN. Big jump up yesterday and another big jump overnight. And ES just continues to trug along here as well. Oil on the rise. Gold and silver jumping off of that. Silver really jumped. And copper. Copper took in a pretty good continuation here overnight. I am not quite sure. I don't remember there being any news overnight that would cause. I think it must be some economic news, but I don't know. So, coming back over here, it kind of puts you in a difficult position in trading the treasuries because clearly the trend is up, but you know, it's kind of signaling that it's not going to be quite that simple. Also, going into this news, they are like completely pulling liquidity. So the micros in particular have almost completely pulled. So they're expecting this to be a big number. We got anything else after that? Well, we got a 30-year bond auction today. The 10-year auction yesterday was a little bit weak, but it wasn't too bad. Investors spoke up the market. Well, it could be. Oops, I forgot to turn my speakers off. There we go. Okay, poor PPI month over month was spot 1 versus spot 2. Well, that did not work at all. Initial jobless claims 237 versus an expected 250. So I think that the PPI probably matters a little bit more, but the jobless claims being lower than expected is not necessarily a good thing. Although I don't know if the jobs numbers being, the jobless claims numbers being really good is so much a problem if inflation is low, right? But we took a big jump up there. The micros didn't really move, so I decided to hit into 3.8, and they did not budge at all. So I'm trapped now. I might have just done something really, really stupid. Rates to, what do you mean rates to 7%? So some iceberging there at 16.5. Looks like a little battle going on here. You think that they'll increase interest rates to 7%? I don't know about that. The market seems to be saying right now that they'll go to 5.25%, 5.5%, and then stop. Like we're at 5.5% to say 7% is like so far away from consensus, it's not even worth talking about. I mean, you would have to get another really strong, unexpected bout of inflation for that to happen. I'm really bummed about how this is playing out, dude. Until real estate cools? No, probably not. In fact, I would argue that you're probably not going to be able to balance out the real estate market until the interest rates come back down. Because the issue is that you have no supply and you need people to build houses. And you need people to sell their current houses and switch out for there to be like inventory, right? Well, high interest rates kind of hurts both of those problems, right? So high interest rates reduces demand. You get what I mean? Higher interest rates is both reducing demand, but it is also reducing supply from people selling their houses and supply from people building new houses. So in order for the real estate market to kind of balance out, it probably kind of, you might need a crash of some sort. I guess that means that they would have to increase interest rates and then bring them back down, and then maybe things can equalize. Maybe. But the other option could be that interest rates just stay reasonably high for a long time, and then things eventually have to kind of balance back out from that. So there was a little bit of an offer being placed there at 16.5. But he pulled it when we got back up to 16. It kind of seems like there are some games going on here. Yeah, I think I really misjudged that. So when I took this trade, what I was seeing was the micros hadn't really moved at all, and there was a bid sitting out there for me to take out. So I hit it, but that bid did not budge. And then we came back out here, and it turns out that actually maybe 838 was actually the appropriate price at the time anyways. So I was like, yeah, I'm literally the low. So I I thought that 3.8 was like right here, and 3.8 was actually up here on the 10-year. So that's why I'm saying, like, I misjudged that. And it's fallen lower. So I'm not necessarily trapped so much anymore. I mean, the spread has come in, I could hit it. I was kind of holding out for a little bit higher because I still kind of feel like that PPI matters more than the initial jobless claims, but the market seems to disagree with me for the moment. There was a little bit of a fight around 16, but now we've just kind of pushed a little bit lower. SCC Sue's Celsius network. Is Bitcoin moving on that? Doesn't seem like it. So one of the things that you might see is like, the Treasury might want to come back to 112.08. But at the moment, it doesn't look like they've got enough to get there. But you never know. It could just keep going, right? Now there appears to be a pullback. The dollar is coming back. So, oh wow, I didn't realize that the dollar was below 100. So it looks like the dollar jumped on that news and it is now pulling back quite quickly. Not helping me too much over here though. You think they'll make new highs today? I think that you're way too confident off of a really fringe theory that might have absolutely nothing to do with the orders that are being executed today. I would think though, my thinking is, okay, so number one, there's the flow from the data that we got. Okay. So there was some initial buying on that data, but overall it looks like that data has been a sell because of the initial jobless claims. Then we got probably spillover from yesterday. Probably still some flows out there that are looking at that CPI and everything and saying, yeah, you know, it looks like inflation is kind of subsiding. Okay. And then we've got the dollar. The dollar below 100 is a pretty big deal in my opinion. It's come down here in this past week very quickly. Very quickly. So you might continue, well, could be both ways, but I think that you're probably still going to see that selling in the dollar that has been lifting treasuries. So wait, is that correct? That's not correct because yesterday it was yeah, lifting treasuries. And yeah, so I do think that the flows are probably tilted to the upside. But clearly it's more it's more complicated than that, right? So to get to back up to those highs, it's definitely possible within this session, but that'll be a pretty big lift. That'll probably, if that is the way that it plays out, it'll probably be a really slow and steady, but quite consistent flow to the long side, right? That's where I'm kind of getting from long, but you know, this whole idea that like, oh, treasuries need to go around to 7% and that sort of stuff. I don't think that that's something driving flows today. I don't think anybody in the market except for you is thinking about that. The housing conundrum is a tough one though, right? Because it really is like housing has become unaffordable for a large portion of people. Which, I mean, if you can't get into a house, you have my sympathy. But it really irks me when people say that they're entitled to something, right? I know this is going to be the unpopular thing, but you're not entitled to a house. You're not even entitled to a living wage. Okay, you can always go and do sustenance farming, but the market prices for certain types of labor are what they are. And those things are based on people's costs and the availability of labor and all sorts of other market forces. And yeah, it is possible sometimes for those things to result in a job that does not, at least in your area, does not make up for the cost of living. And maybe sometimes you would want to make some adjustments to try and help the market, because maybe that's a job that you really need people, that's really important to the rest of the economy, and nobody wants to do it, but we're not entitled to do it. Okay, well, we recovered 16. So that's got me feeling a little better. Do you feel like there was a little bit of shenanigans going on with that whole thing? I'm not entirely sure if that whole move, I mean, like the initial drive higher, that's just the knee-jerk reaction on the news, low liquidity, right? But the stuff that happened after that looked to me more like an endogenous move than it was any kind of reaction to the news. Like that maybe longs kind of got trapped and there was a little bit of puking down there at the lows and stuff. Okay, so you're looking at the Jigsaw Diamond tools. Is it a one-time fee or can I do a monthly cost or both? Okay, so it's both. So there is a one-time fee to purchase the software, which is like basically $500, right? And then to trade live, this isn't true if you want to just trade sim or if you were going to execute on a different platform, but to trade live on the DOM, it's basically $50 a month. Jigsaw often does like discount coupons. You get like one discount coupon in your lifetime. But they often do that around Christmas, so you can get, you know, a year's worth of the trading license for a discount. Now that seems like a lot, but it's pretty comparable to most of your other platforms, right? Like if you were to do Sierra charts, after you're paying for the software and the extra data and that sort of a thing, you're coming out to like $42 a month that you're paying on it. So it's a little bit more expensive than other platforms, but it's still roughly in line with what you have to pay. Of course, there are platforms out there that are just completely no fee each month. And if you're looking for that, then you probably want to look at like, let's see here. There's Iron Beam. There's I can't remember all of the other ones. There's a couple of platforms where the platform comes free with some brokers. Oh, I guess with Edge Clear you can do the Edge Pro X. That one is free for you, I think. Oh no, actually I'm not. I don't think that one is free. Oh, I don't remember now. I'd have to go look. Yeah. Futures trading ain't cheap. Like, that's the thing, is that the futures, and so like if it's like Forex, right? The more people that they can get to trade Forex, the better for them. Stock trading, like the more stock trading they can get to happen, the better it is for the broker, you know, especially like a Robinhood where everything is about selling the data, right? They want to get as many people running as possible. In futures, okay, well, like the more that you trade in futures, there is commissions that that your broker gets, but like the commissions are pretty minimal, you know, like they aren't buying yachts with this. Okay. being a broker is a tough business. They do make money. They can the right broker, you do it the right way, you can make a pretty good living from it. But it's a tough business. It's a really tough business. You know, because the futures are just like very efficient, right? And so they kind of have to make up for it in other ways. And that's why, you know, there's platforms. Most brokers have some sort of a platform associated with them with some sort of special deal with the platform developers and things, because they got to find some way to bring the people in, you know? I don't know if stock trading is more, like, in terms of like what you have to pay monthly fees wise, stock trading is not as expensive, because you can do stock trading for basically for free. Of course, to really day trade in stock trading, you have to have a bigger wad to start with. So there's that. If you're not trading Robinhood, there's commissions are probably more expensive. At least more expensive than trading treasuries, because the commissions on treasuries are dirt cheap. That's the other thing, is I'm pretty sure that your broker would prefer you to trade the S&P 500 rather than the treasuries. The best tools. Well, so this is where I've always had a problem with stocks, because I feel like that the tools that you get with stocks are just not very good. $220 a month on trade ideas. I haven't heard of that before. I mean, like the platforms that I know of in stocks that are really good are not really available to retail traders. I'm sorry, I'm having a hard time talking. You know, I came into this week with the goal of like just not making any kind of big mistakes or anything. Because you know, it's been a tough week. It's been a lot of mental energy and drain on me. I have a lot going on. And I think I failed that today. So I really shouldn't be in this. And it looked like it was going good and I could hang on. I don't know. If they go for a new low here, then it's going to be ugly. And it looks like they're going to go for it, man. It looks like they're intent on screwing me over. And probably as soon as I bail, it will like just be nothing but up after that. Yeah, I'm short rates right now, and I really shouldn't have clicked that. I really shouldn't have clicked that. So this is this is a situation that I've always had a very difficult time dealing with. Okay, you're in a trade, it's under, you don't like the overall, well, the flows are going against you. Like the flows are just very much going against you, right? But there's like some short term, oh, it's probably going to come back in a little bit. And like, that bailing right here is like a bad spot to bail. Right? So what do? Well, if you hold out, a lot of the time it does come all the way back and you scratch it or you even make a profit. I've done that before. But it can also just like squeeze you. And it's often the case that like right where your maximum pain point is right where it turns around. So that makes you want to hold on to it. But then what if it's not that situation? You know what I mean? And so from a mental perspective, that can make it very difficult to deal with. Like I'm not happy that they're back at these lows. So their spread is a little bit wider than it should be. All right, I guess I take that. Anyways, yeah. I mean, there was reasons why I did it. I think it was a misjudgment. I think it was an unforced error on my part. I knew it almost immediately when it happened, like off of how it played. And then it just started going the other ways so much harder than I thought it would. So it's too early. I might be, well, I wasn't doing it based off of that. Like, that was what I was kind of trying to say is like, I see the possibility for it to go back, but it's probably going to be a long, hard road. Okay, is Jigsaw's DOM 100% necessary to learn order flow, or could I use any DOM that can display volume, bid, ask, etc.? Okay, good question. So you need a DOM that displays the market orders hitting into the limit orders. That's kind of Jigsaw's original innovation. If you don't have those columns, then you have to watch the volume profile column, which is really difficult to do. But there's a number of platforms that do that. For instance, Sierra Charts does that. Okay, well, I'm not. It is doing exactly like what I said so far, right? Is like I'm going to bail and it turns around. Because the issue is I do not want to risk another flush lower. They're not doing it yet, but this could just be the kind of slow down, back up, and then go for it sort of a thing. So, I don't know. Kind of don't really have a choice but to have puked there. So I puked. If I start to see more encouraging flows, I'll get back in. It's rough because I've come off of a period where I did really, really well, and now it feels like the market is trading against me. And it feels like the market is trading against me in places where, it would be really hard to try and trade against me. So I don't think that it's trading against me per se. It's got to be that I am like misreading this big time, right? Well, I know where I made the mistake that one. Well, look at that. It's not trading against me, but how would it behave differently if it wasn't? Now see that right there? Now there's an iceberg at 16. Jeez. Did that click? Ah, shit. Okay. I was frustrated that it had moved. I did not intend to click on 83821. Yeah, the changes in the volume, about 7K, it could have been a lot of different things. But there wasn't necessarily any catalysts or anything like that. So I think we could generalize here and say that this action that we've had below 19 since the news is endogenous in nature, right? Okay. Throw in 1,000 contracts? No thanks. So to me, if it's endogenous in nature, that's important, right? Because I'm much more interested in those big block orders that are just going to continually push the market in a certain direction over a very long period of time. Okay. Now, we are now at highs in cumulative deltas, so that could be this. This could be meta order, somebody going long in the treasuries, right? Here's the top of the hour. The one thing I like about the watch here is that it makes that beep at the top of the hour. It really is. It really what it's saying to me is that where I got out, I should have doubled down, right? Well, this is going okay, but I'm still nervous because, I'm kind of trying to cover a mistake, and that was the second mistake today, right? So, being back above 19 though is very encouraging. I don't know. I'm thinking, guys, that I don't have a very good read on this yet, because if we do breach the highs, it's going to do so much more quickly than I anticipated. I mean, this is coming back up really strongly. It kind of makes me wonder what kind of carnage we might see if they actually do get up there. I don't know. This is a little wild. wouldn't say this is unprecedented or doesn't make sense or anything like that. It's a less common sort of a thing, right? Like usually the treasuries will go one way and then kind of even out, after the flow is done. But like for them to go one way, reverse, do a double test on the bottom and then come all the way back up to the other end of the range, that is a lot of movement for the treasuries. I guess given that it's the inflation numbers and that those inflation numbers came well under consensus, you could get varied enough of flows in the treasuries to make that sort of a thing happen, but it's just not something that happens very often. It's just a gravy chain to hop onto. Let's see. Like I said, if they're able to get to those highs, I still think it's going to be a bit of a lift for them to get to the highs, right? Like we've already had, oh my gosh, how much is this? What was the lows? 55. So this was a 15K buy. You know what? Actually, so on 15K orders, that's pretty standard amount of movement for 15K orders. And you got to ask yourself, okay, so for us to breach the highs, how much do we need to get? Probably at least 20, 25K. And then you breach higher and you're going to be like in the 30s, 40s. Is this really a 30, 40 buy in cumulative delta sort of a day situation? I don't know about that. They also are pulling back a little bit. So sometimes when you get a trend like that, it will come up to a spot. It will just build the volume profile and go sideways for a while and then it'll continue through, right? We got a bit more of a pullback instead. Which could mean either A, that meta order that was buying has subsided. Could also, I think if you got a lot of trade going on, you should expect to see deeper pullbacks, right? Like if you got a lot of short-term traders involved in it, then you get more of that short-term volatility. So far, though, it doesn't look like anything to have to be too concerned about. I'm feeling okay. I'm feeling like I should be more nervous than I am. Feeling like I should be more nervous than I am. Okay, so now what I'm seeing is a slight bias upwards in the tape, but volume having, evened out substantially. Like the pace of the volume is not nearly as much as it was. And for instance, there's only 500 contracts at 20.5, they're not hitting it. And when they trade across 20, they're trading with less than 500. There's still a lot of level 2 activity though. How important is cumulative delta in your analysis? I'd say it's pretty important. I don't think my system would really work without cumulative delta. Because you really need some way to judge how much of an imbalance there is, right? Because like I think of it as like degree of imbalance versus liquidity conditions, right? So I can come in and I can say, okay, we've had a 15,000 contract difference in favor of longs. How big is that compared to similar types of moves in action and so forth? Well, a normal sized move in the treasuries is about 15,000. So, you know, if we're going to go up to if we get to 15,000 and that doesn't get us up to the highs, then that means it's a tough lift to get up there, right? And another thing that I would add is that we are in like what I would call like the low liquidity hole sort of a thing, right? We had a big move up. We crossed back across that really quickly, bounced, fell back to the low really easily, and then came across this very quickly as well. So that would totally be a place where I would think that the inverse sine law should apply. That the long was as big or bigger than the short, ergo it should go further, but it did not. So I guess maybe that's because the short happened during low liquidity, I guess. But I actually think that off of 15,000 contracts, they maybe should have gotten closer to that high, right? So I don't know what to make of that. If this buying from the lows is like a short-term trade, then they're probably unhappy with it. But it was such a strong flow, that's probably not what happened. In fact, probably what happened is the dollar reversed, and so that's why we did. Well, this is frustrating. Does the Jigsaw trading do crypto? Yes, I believe that it can connect to Coinbase. Let me check the documentation here. Or no, I can just pull it up like this. Connection manager, new. Bitfinex, you can do Bitfinex. On the sim, well, yeah, I mean, if you have the data, then you can use the sim. I honestly would not recommend day trading cryptocurrencies, but what'll happen is when the cryptocurrencies are on like a huge bull run, you'll get a ton of people day trading it and showing that they're making tons of money from it. But almost always those guys get crushed, because the issue in the cryptocurrencies is that the overall liquidity in the market is so low relative to the whales out there that any kind of big move can just devastate your account. Holy crap, this comes back up so quickly. Did you see that the buying came back in and it pushed them up 5 ticks all at once? Do you think market makers adjust their appetite for absorption interest based on how aggressive the day, which may result in an increase or decrease of? Yeah, absolutely. Well, so I think, for instance, in this situation, seeing freak buying flows come out of nowhere like that would make me very, very weary about taking on inventory short, right? Well, yeah, you need the data on the sim. So the way that it works is you get the data from your data provider, and then the sim and everything is happening just within Jigsaw. Hmm. So that is moving because the dollar is pushing down again here. Well, let's say that they seem related because the Japanese yen is not. No, yeah, Japanese yen, I'd say, is following the treasury pretty closely. Can you explain the inside bid ask the black squares near the current price? Oh, so the black is just, it just makes that black on the inside. I know some of the colors on the inside don't really matter too much, but it highlights the price where there was the last order took place, and then the other one on the inside will be black. But this column on the inside here is the market orders, essentially. It's market orders. But what happens is if we tick down and it's been down for more than 2.5 seconds. So if we tick back up, you see how the 20 half cleared again, went back to 0. So it resets so that you can see how many contracts it takes to make it tick each time, essentially, is what's going on there. So I say this inside column is really useful because the issue, the difficult thing that you get, what the hell? So somebody just dumped a 3,000 lot at 19 half on the bid, and everything just like stopped. Do you see that? Well, I was thinking about maybe I should take some sequential profits on this, but I think I'm holding it. Yeah, that was nuts, Octavius, right? I haven't seen one placed so, like, it was so nonchalant, you know what I mean? And like, so oftentimes when you get an order like that gets placed on the inside so close to the market, like the instruments immediately react to it. But it was kind of more like everything paused and was like, okay, I wasn't expecting that. What do I do now? And then after about 30 seconds, then it started buying. The order's not there anymore. What do you mean by does Jigsaw not have data for the sim? So Jigsaw themselves do not provide any kind of market data. You're getting the market data from Rhythmic, CQG, whatever, right? Or in the case of the cryptocurrency exchange, you're getting it from Bitfinex. Right. Okay, now there's 2,700 at 20. But Jigsaw, the company, does not provide any kind of market data. They provide software that reads market data, right? Okay, well, there's a new... Oh, that was not a swing high. It was just equal to it. Where to get data? Well, so typically you're using Jigsaw to trade futures, and so most people get their data from Rhythmic or CQG. and that data is provided through your broker. So really, where the gateway that you're looking for, if you're looking to get into trading with Jigsaw and everything, the gateway is finding and introducing broker, right? So if you want to do Jigsaw, I'd recommend using EdgeClear, for instance. So you go to EdgeClear, and then they will tell you the options that you have in terms of data and things like that. Okay, so this is so interesting. So we did rise on that order showing up, right? But we only got up to the top end of that range, and then we came back down pretty quickly. Now, overall, it still shows pretty aggressive flows along. I don't know if this is done yet or not. I'm having a hard time sorting this through, to be honest. Octavia says, I'm not touching this, no edge. Oh, well, it sure seemed like when that buy order showed up, that was a strong sign that this was going to continue buying. But it coming back that quickly like that kind of makes you wonder, doesn't it? I think that it's probably still okay to the long side, but something fishy is definitely going on here. And if I hadn't already been in a position, I would definitely be like avoiding. Oh, holy shit. What? Okay. You know what? I'm just going to shut up now. Do you need a broker? No, your broker will have an agreement with data providers. So I'm telling you, what you need to do is go to EdgeClear and get a trial account with them. What are you trying to do, Saf? What is your larger goal here? So when people start asking me specific questions like that, usually it's the case that you know, you're missing some information, you're trying to do something really specific or weird, and that's why kind of some of the questions don't make sense to us. So if I understand what your larger goal is, then I can probably like fill in the missing okay, yes. Which column, what do the columns represent? Okay, so the blue column are bids, okay, limit buy orders. The orange red column are offers, limit sell orders, and then the two columns in the middle are the market orders hitting into those, okay? And then you've got the price, volume profile, and there's another column over here for like your orders and for taking notes. Jeez, this is going. And look, there's that bid comes back at 20. This is really quite choppy action for the treasury. I'm you know, they did come out and beat that last swing high by like a tick, pulled back, and now it looks like they're maybe going to break it again. But it's a lot more, I don't know. There you go. Okay, so sorry, I got a couple of different things going on here. Okay, so Saf, what you should do is go to Edge Clear and create a demo account. Buy Jigsaw, go to Edge Clear and get a trial account, and then try that for 2 weeks. And if everything works according to your expectations, then fund an account with them. And what you would do is you would fund the minimum size account that they allow. I think it's like $1,500 there. I can't recall. So it's a little bit higher at EdgeClear than other places. And then you only trade at SIM. So you have to fund an account to get the data and everything, but then you only trade at SIM until you feel that you're ready. Does that make sense? That's the way that you do it. Okay. Yeah, you will need data, and it will it'll be it's about $20-$30 a month for the data. That's a fee that the CME charges, basically. Oh, jeez. Well, there was a pretty good jump back up there to the top of this, but they haven't quite busted out yet. Okay, sorry. So was there another question? Maybe it's my DX feed data because my volume is not the same. Oh, okay. So, there can sometimes be differences between different data providers. If it's like the actual volume, like I don't have like overall volume, but if for instance your volume profile, assuming that you're resetting it at the same time as me, if your volume profile was substantially different from mine, then that would be kind of weird. But like, so this is where it gets weird, is that like the feed for the matches, when orders come through, and the feed for like the level 2 don't match up exactly. There's latency between them, and one could be ahead or behind, and that's constantly changing, right? And so what could happen is, what it says, if there was an iceberg there, for instance, or things like that, depending on how the level 2 was behaving in that place, could show more of the iceberg on the offer or the bid or things like that. So there was a big order showed up on the offer briefly, but it kind of disappeared, and I don't know. Maybe there could be some iceberging at 23.5, but I haven't seen it. Oh, the bids on the inside are actually pretty solid. That's interesting. Yeah, there's definitely well, yeah, maybe it's spoofing, but sometimes what you'll see happen is they were placing an order and they just converted it into an iceberg. So that's why I would watch 23.5 if we trade it, if there's an iceberg there or not. Right? There's orders have been hitting it, and that those offers didn't completely pull. So see, they tried to clear it, and it just refreshed. $1,000 and it didn't go. Okay, 1,500. So there was not an iceberg there. It took a little bit more to get through that, but there wasn't 3K there. So I guess it was a spoof. Now, of course, it was originally at 23 anyways, so. I'd have to say, like, so that one that was on the offer, it was only there for like a split second. Like literally half a second. Okay, so the $50 on Jigsaw already is no. So the $50 is separate. The $50 is for you to execute. The $30 a month for the data fees that the CME requires everybody to do will come out of your trading account. So if you're going to do sim, if you're going to start out, you're going to do sim, then you just buy Jigsaw. Don't buy the live trading license. Create an account at Edge, Clear, or AMP Futures, and then only trade sim. And basically, it'll be $30 a month out of your trading account. Well, I tell you what, man, this has been awfully weird behavior. I'm thinking of buying Jigsaw specifically because I heard the sim account is more accurate than other autofill limit orders. Is that true? Yes. So what Jigsaw does is it tries to estimate where you are in the queue based on how many orders have pulled, and using a formula to determine how many of those were likely to be ahead of you. And it's a little bit more stingy than real life is. So the simulator in Jigsaw is slightly more stingy about fills. There are some sims, especially like this, like if you do, if you get CQG or Rhythmic and you use their sim trading system, where the simulator is on the server, they're so inaccurate. Like you can place an order in there, and like if you're trying to do alligators, you put alligators in there, and it always thinks that you're at the beginning of the queue when there's no way that you would be. So it's the Jigsaw sim is more accurate in that respect, yes. Because for scalping futures, you know, where you are in the queue, like it matters, right? And I'm not aware, it's possible, but I'm not aware of any other platforms that do this. Oh, did you close it, Greg? Well, I tell you what, this has been weird action. Do you think that we're gonna bust the highs now? Because we're right there. Still going. Oh, did I not? Okay, here we go. They're stepping up to it. Stepped up to it, but they didn't go for it yet. Often when we get into this point, I'm always looking for that iceberg at 24.5. Looking for, if there's an iceberg just before the low, that's like the level break setup. They almost always have one before they try and bust it. That doesn't mean, and in this situation, I'm not sure if we could say, so when we're having a strong trend, it works every time. Otherwise, it's a 50-50. I don't know if we can say today is a strong trend, because while we are getting a very strong meta order to the long side, it has been very choppy today, right? Well, okay, so there they just tried to bust it, but it didn't hold. Looks like they probably could go higher, but it's probably going to be a little bit of a back and forth and a bit of a journey before, as they do it. But they did bust it there. What about the dollar? What's the dollar doing? The dollar is still moving to the downside. Just slowly and surely. Can you program stocks? I mean, yeah, a Ninja's not as good for stocks yet, but like if you use DX feed, you can program and do stuff with stocks, yeah. I'm sorry, guys. I'm having a hard time keeping up with everything that's going on. And it's not you guys. I mean, there is a lot going on right now, but it's not you guys. It has just been such a long week. Okay. That offer at 25 is changing around a lot. Okay, he hit it. Reset right there. What was the all-time high in ES? That's a good question. It was 48.07. that seems so high compared to where we are at 45, but that's only like a quarter. Okay, so there they slammed it again. So the offers aren't jumping out of the way, but the buyers are punching through it. Well, this is going good. I'm trying to so I'm noticing myself wanting to disengage from it. I need to kind of keep an eye on it here because I want to don't want to miss if we form a liquidity hole here or something like that. This has been pretty slow and steady buying, though. I mean, very, very aggressive, much faster than I anticipated, but extremely persistent. And that was a breach of the highs. It did do what Mr. M was predicting, and faster than I thought it would happen. So pretty crazy. I'd say this is a pretty crazy, counter trend. Yeah, good recovery. Yeah, that you know what though, like the first trade that I took really was dumb. I totally misread that situation. It was, like I did what I did. It wasn't an unforced error, like a misclick per se. This trade that I'm in, I'm on 2 contracts because of a misclick, but I took that trade was a complete, so I would consider it an unforced error, but not a misclick. It was just a dumb thing for me to have done, right? So if you guys weren't here earlier, what happened was I thought that the micros weren't keeping up with the full treasuries, and so I tried catching the edge, but so I hit into the bid, and the bid didn't clear at all, and then it turned out that they were actually pretty close to in line, and I was wrong, and so I ended up eating the whole range. The distance it jumped caught you off guard. Yeah, well, I was not expecting it to move that much as well, but I wasn't expecting the numbers to be that varied. The mouse is double. Well, so the way that the double click worked was I wanted to get short at a certain price, and it ran away from me. And I got frustrated and slammed my mouse on the ground and accidentally clicked the button and clicked into the market clicked at that price. That's what happens. So the thing that I haven't been saying is that I've been doing new stuff at work. I've been having to learn and pick up a bunch of stuff, and it's just been like really focused, intense work and everything. That's why I've been preparing to be a little bit less in the trading this week, and but it didn't work out that way, did it? Because here I am ending up trading today quite heavily, and so that's why I'm saying like I would expect myself to be a little bit weaker than normal because it's Thursday. You get to the end of the week and it drains you. It drains you. I've done a good job this week. Been eating pretty good and keeping the electrolytes up and working out and everything. But geez, I'm starting to feel exhausted this week. Okay. So there's an iceberg bid at 26. Okay, that took me out. So what I'm seeing here is, number one, we've stayed in this range for quite a bit. This has been one of the longest ranges that we've had during this whole trend. I've also seen a couple of icebergs in this area, so I am anticipating that we've maybe kind of reached that limit, and that's why I decided to take it off. Not only that, but that was I ended up catching 70, so now basically what happened was I revenge traded and it worked out. Right? Okay, so I'm really happy so far with that execution because it is coming back. When you are looking at cumulative delta, are you considering any tick size or only greater than X? And is that the same for level 2? I'm not quite sure what you mean by that. So are you saying if I get an order that is like above my current best bid, what do I do? Is that what you're talking about? Because not that it happens very often, but the indicators that I've been doing just treat it the same as if it was at the offer. Yeah, does it Amir, isn't it wild to see it below one? Well, it's not wild. I mean, for the past year, I've been sitting here being like just stunned that they've been able to sustain themselves above 100 for so long and so strongly. But what's wild is that it came back under 100 so quickly. Like, let's see if I have a chart for that. I think I do have a chart for that. Is it on my, yeah, on my 6J I have it. Like, look at this day right here, right? Like, that was such a massive decline in the dollar. After it holding on that support so strongly for a really long time too. The delta is a liar. Well, so yeah, you know, I don't think that you've been around when we've talked about this, Greg, but we've talked about it a lot, and I think it's a really important thing to note. Okay, so what is cumulative delta? Cumulative delta essentially shows us the imbalance in the market orders. Okay, if there's a persistent imbalance, long or short, between the buyers and sellers, you know. So if we're getting a meta order, you know, somebody's executing into the market, a meta order that takes an hour for them to do, right? Then you're going to see that persistent imbalance over the entire hour, and that will reflect in cumulative delta consistently moving up, right? So that does not mean that what you do is you say, if cumulative delta moved up, then I want to buy, and if cumulative moved down, then I want to sell, right? It's more complicated than that, because there's the liquidity conditions change, and there's absorption and things like that. And so sometimes price does not move along with cumulative delta. But that's kind of the thing, is that I, in particular, I'm looking for a very specific kind of situation, which is I want to ride the meta orders, right? So I'm really only interested in the times where cumulative delta is persistently moving in one direction and price is moving with it. So when cumulative delta and price are well correlated and have a strong trend, that's when I want to trade. That's like what's happening today, for instance, right? And also, I'm using the cumulative delta to measure the size of a move. So most people will come in and they'll say, okay, this moved 11 ticks. That's a really big move. But that doesn't really matter, because liquidity conditions, right? So the amount that price moved is going to adjust relative to the liquidity conditions. And so the actual price change is not really a very effective measure of how strong a trend was. So instead, what I'm doing is I'm using cumulative delta to measure it. So now I can see what was the actual amount of imbalance that led to that move, right? And that's where you'll tend to find some consistency, where, you know, based on this kind of news and this amount of surprise, here's how much you expect cumulative delta to change net, right? And you can kind of keep track of that sort of stuff, and that gives you a really good expectation. Yeah, it gives you a good benchmark for, you know, how far you can actually expect it to go, right? That's why when I was saying earlier, like, we had already moved up 15,000 net contracts, and it was like, well, that'll be a really big pull, or a lift, sorry. It'd be a really big lift for them to get to the highest, because it's going to have to be like 25, 30K net change, right? But it did end up happening, right? And then when we got to that 30, 35K, I kind of knew, well, this is about the spot where you're probably going to see the meta order kind of scale back a little bit. And sure enough, it started to sit there in that range. You saw some big icebergs. I was able to get out before it came back a little bit lower. So let's see here. So the next thing I have to think about is, are they going to try and bust the highs again or not? Well, right now, it seems to be showing like a head and shoulders pattern. I don't know about this. It also comes back to, it seems that a lot of the driver here has been the dollar. The dollar seems to have been driving a lot of this. So money's coming out of the US, and that's reducing interest rates. Or vice versa. I don't know which one is the chicken and which one is the egg, and which one comes first. Why are there huge limit orders constantly around 2 ticks from the bid ask in the 10-year micros? Good question. I wish I knew. I totally know what you're talking about, right? So you come in here, and at 3.804, there are 778 contracts offered. And I don't think I have ever seen anything even close to that much trade. So why does it show it? I don't know. I don't know. That's just the size that robot shows for some reason. Is it artificial demand? I don't know. I really don't know what the deal is with it. It's kind of... trying to influence trade. Well, and the other thing is that I don't typically see an imbalance between the two of them or anything like that. Like, it's there, but I'm skeptical that it has any influence on the market, you know? But who knows? Maybe there's been an instance where there's been a collision that's like that I didn't know about. Right? Because that's the thing, is like, if somebody all of a sudden came in and decided to buy 1,000 micro contracts, those guys would get filled and would probably be pissed, right? I've seen hundreds lots trade. And maybe not even like all at once, but kind of like I've seen transactions that have been in the hundreds. Kind of like icebergs and that sort of a thing. So I don't know. So the one thing that you should see in the level 2, and this is kind of empirically proven, is that you should typically will see the liquidity look like this. Okay, so there will be a hole in the liquidity where we've just traded. So that's like here in the 10-year, where one price is usually around 500 to 700. Okay, right now 23 is 500, right? That's this spot right here. And then usually the prices just above and below that have a little bit more liquidity than everything else, and then the liquidity kind of flattens out the further out you go. That's the overall statistical tendency. I'll actually show you a more professional chart of that, because I have it all prepared for the video on the volume profile I'm making. So I made all this stuff for this volume profile video, and you know, I really wanted it to be clickbaity and to like really attract attention and stuff, because I think that there's some really big important criticisms of volume profile. But now I'm kind of like trying to dial it back a little bit. Because I went and I was able to get a back test that looked really good. Well, not really good. It wasn't really good, but it was profitable. I was able to get a back test to look profitable. And I don't want people to be like, well, it worked, you're full of shit, sort of a thing, right? So I'm feeling like I need to dial it back a little bit just so that people understand that, like, okay, there is something to volume profile, but there are some important key deficiencies that if you use this more refined knowledge about the markets, it can be overcome and can turn it into a really powerful tool, right? So I'm making this for this video. Where is it? Here you go. See? So there tends to be around the current prices. Around the current prices, there tends to be a little bit of the liquidity is lower. And then a little bit above and below that, it's a little bit higher. And then it kind of gently trails off. So I think that I will re-record one last section going over the back test, where I can say, okay, like here, I did this original one. I messed around with it a little bit. I eventually decided on this one because that was what performed best. Because the thing is that it's not... Sorry. The setup that I decided to go with here is not like purely how I think most of volume profile traders trade it, because it's basically saying, like, if we cross back into the previous day's value area, then it starts to take it. So it doesn't have to have started out like way out here or anything like that. And I think that's kind of was the problem with the one that I did originally, is that it was basically saying if we're outside of the value area and we start heading down and back to it, then try to take a short on the theory that it will come back. But the problem is that there's this fat tail with it, right? There's these trend days where it starts up above it, there's a gap, and then it just goes all day. And those you just get absolutely destroyed with, right? So if you get rid of those, and you only play when it's kind of coming close to the volume profile, that adds a bunch of trades, but it tends to get you more of the situation where it's not really doing anything that day. You know what I mean? And so that seems to work better. So, yeah. It seems to me like, I would be more interested in the previous day's point of control when I feel like that there's nothing is supposed to happen today. There's no news. It's likely, the flows are all kind of iffy. It's a Monday or something like that, right? And then I'd be more interested in where the previous day's point of control was. So how to put that into a video and all of that. But then the other side that I have to show is that it is profitable, but the Sharpe ratio is really, really low. The drawdowns are very, very steep. The amount of money that you're making overall isn't, it was something like 40,000 over 12 years or something. So $2,000 a year on treasuries is not necessarily very great. I think it was 40K. 3,000 a year. And maybe that isn't terrible. But, basically it kind of says that, okay, there's something to volume profile, but there's probably also some key deficiencies. There's something missing, right? And that's what I'm kind of trying to tell people is like, they're picking up on something real. There's a real behavior, but what they thought is causing that behavior is wrong. And when you understand what's really causing that behavior, you can refine it even more. You can decide when to trade it and when not to trade it a lot more effectively. You make a note that, well, I don't know if there's anything I could say about ledges in the volume profile. I wish so here here's the thing. I have the data to be able to backtest that, right? But it's a much more involved kind of scientific endeavor. So if we want to do something about ledges, we could maybe try making a video about that. We'd need to do a whole set of research and stuff, right? So here's the thing. To generate those volume profile ledges, it was about, I want to say it takes about 20 minutes to run through the whole data set. It's a lot, right? And we want to do stuff like identify the ledges intraday. That's like 5 times the computation. Like it's gonna be a serious project if we go into it. So, but I hope to put the video out on Monday because I have it mostly edited. I should have some time Friday night to work on it. The outcome can be interesting. It could be. I don't know if there's going to be a strong edge in it or not. But what I think is interesting about it is that it kind of introduces some of these more interesting statistical kind of measurements that you can do in Python that you aren't really seeing people do in NinjaTrader per se. So yeah, showing you how to do that and everything could be a really valuable video to anybody that's sophisticated enough to do that sort of thing. Although the problem still comes into, like Gus has been helping me, right? Gus gave me the data, so like that's the sort of thing that he's getting into. And then we have to get in, and then I have the data to do the level 2 stuff as well. So then I can start building that system. So basically, I do think that I will do it. I think the ledges would be a really good base case test for it. So what you want to do is you want to make a pipeline that's like, okay, you get the raw data, and then you do some processing on that data and save those results. And then those results are going to be the stuff that you actually backtest on, right? So you're kind of saving yourself as much computation as possible so that when you get to the actual running the trading algorithm part, that is as efficient as possible so that you can actually do machine learning on it, right? So you kind of want to build a pipeline. So I now have an example of taking that data and processing it. So now the next step is, how do you build the pipeline out of that? I think that what I want to do is I want to use Airflow. So I don't know if Gus is still there, but this would be a useful thing to you. Okay. So what Airflow is it's a scheduler sort of a thing. So you get this thing where like maybe at 6 o'clock every day, you want to do this processing, right? And then there's another process that takes the results of that and does some processing on that, right? So you could say, okay, at 6 o'clock we run this one, and at 7 o'clock we run this one. But what happens if this one takes longer than an hour to complete? Then the whole process gets screwed up and you have to like readjust your whole schedule and that sort of a thing, right? So what Airflow does instead is it creates a DAG, a directed acyclical graph. I forget what, I think that's what it stands for, something like that. But basically the DAG says, okay, this process runs when this process is finished, this process runs, and it orchestrates. So it's an orchestration software. So then you can set up this pipeline of, does this one runs, this one runs, this one runs, right? So once you got all of that, and then I can deploy it to, I also want to make it cloudable. So I'll run my own Kubernetes cluster and it gets deployed to that cluster. So then what should happen is I write the code, commit the code, pull it, GitHub Actions runs the deployment to Kubernetes, kicks off the graph, and everything runs. Chris is telling us a lot of RIAs sat their clients in cash the first half of the year. Wait, what do we mean by RIAs? What does that stand for? That I don't think I've seen that acronym in an investment context. Investment advisor. Maybe you mean IARs, investment advisor representatives. Sat their clients in cash in the first half of the year, making them miss the majority of the moves. So now we're seeing a lot of money not wanting to miss out. Yes. Oh, registered investment advisor. Okay, yeah. No, that is true. That is true. Zero Hedge has been talking about this. So let me show you. Well, I don't think I should show you this note because it's for subscribers, but Zero Hedge had a note for subscribers yesterday that went into the Goldman Sachs flow guru and his anticipation of things. And he was basically saying the same thing, that there was so much money that had stayed out of the rally that they're chasing it. And they were essentially saying, they were saying that they expected this rally to be like a blow off top, that we were going to continue going on until all of that money came in. It would be a blow off top, and then it would probably be all downside into the rest of the year if we potentially get that recession they're talking about, right? It also showed, by the way, that in a long tape, there was like some 260K long expected in a long tape in the treasuries. Which was like, so like this downside that we've been having over the past few weeks or whatever was like 94K from the CTAs. And they're saying it will be like 250 or 280 or something like that in a long tape. And it has been long here, right? So that kind of suggests that this uptrend that we've been getting in treasuries could really have legs if it keeps going here. Like if the CTAs jump onto it, it's going to be like a whew. Yeah, how is this as a predictor? Yeah, that's 100% the sort of thing that we're talking about. It's the sort of a thing that is the reason why I say it's not really about technicals versus fundamentals. Because how do you categorize that information? Right? So is it fundamental information? Well, it's not about the economy or any of that, right? It's about positioning in and expected orders based on CTAs or registered investment advisors and how much money has been staying on the sideline, right? So it's not really fundamentals, but it's not really technicals, because when we say technicals, I've always wanted to say like, well, technicals tends to be like the data generated from the exchange, right? So it doesn't fit into your classical definitions of fundamentals versus technicals. You could say technicals or fundamentals is the economy and technicals is everything else. So you could call it technical, but it's not really technical in the same way that like a Head and Shoulders is technical, right? And that's why I say like just that whole framework of like what's fundamental and technical information, just throw it away. It's not useful to us. It's not useful to us on the daily time frame, right? All that matters is what predicts orders. Okay. I'll look at that. D sent me a video about volume profile. Yeah, I kind of got to walk a fine line between like, right, there's problems with volume profile, but it's not useless or broken. You just kind of need to adjust your framework a little bit. Right. And so it's like you don't want to piss off the volume profile traders so much that they don't watch the rest of the video and then get the big payoff that will help them. Right. But you also have to be aggressive against it enough for them to understand that there's something that they need to learn and that they should really watch it, and that, you know, this is a video that I'm going to click on and that sort of stuff like that. So and I'm not necessarily very good at that sort of a thing. So kind of a little, I might overthink it. On this one, this was another one where I think that like the script that I wrote is really good. I don't think that my delivery was the greatest, but okay. Well, I'm sure that there's a lot. So like what I've been looking at kind of says that if you're a volume profile trader and you have enough experience to kind of end up doing the things that I'm saying you should do and then not understand why, then you probably would do pretty well. Although I bet with periods of difficulty, right? So like one of the things that I'm also noting when I did the back test was that the way that the simple setup that I am planning on showing does really well recently. Because what keeps happening is S&P 500 will open up, it'll sell really hard, and then they buy the dip, right? And so in that situation, it does well. And the way that the stats work and everything suggests to me that those actual numbers are not so much key as much as it is a volatility thing. That those numbers just tend to correlate pretty okay with what we should expect from volatility. Oh my gosh, I totally lost track of the time. And I'm looking back at it and I'm like, oh, it's only 8:18. So that whole odyssey that we went through today happened really quickly. I was out of it before 7:45. Wow. Wowzer. It's been pretty dead since then, though. It really does look to me like there was a very aggressive order going on the long side, and that they sorted it out. Like they're done. Here's another way of looking at it. If I can bring it up here. So what really happened is I am the most important trader in this market, and everything that the market is doing is based on what I did. And so I ended up buying somewhere in here. And so because of that, the market decided to move down here. And I held on, so they tried to shake me out a second time and I bailed. So when I bailed, then they decided to buy. So I decided to get in as well, somewhere around here, I think it was. Okay. And at that point, they felt bad for me. So they let me make it all back. That's what really actually happened. So the next time that happens, if you just adjust your trading to, whatever it is that I'm doing. Of course, I'm being sarcastic here, but. Say there was a market order on the bid. Say 4,500K on a few minutes, and they test that order and it trades through it lower. What would you call it? I call that a collision. Yeah, so if there's like a really big order sitting on the bid and they trade through that big order, especially if there was a big market order in that flow that took it out, which is very often the case, we call it a collision. So there's a collision between two big players. So two things kind of happen here when that sort of situation occurs. The first is that if there was a lot of trade around it as well, then you're going to exhaust the liquidity and create a liquidity hole. Like, it's very likely to create a liquidity hole. Okay. But it can also happen that when you get a collision like that, that you are running into a really crazy trend, right? So if they take out an order like that, it can run after that. It can totally run after that. Is that on ES? I'd say maybe, yeah, that could be a collision. So the issue, so D sent me a picture of it here. I just open it in browser. Oh, that was in ZN. I wasn't paying enough attention. So the thing is that I don't think that there was a large bid there. So what I'm talking about is like you see 4,000-5,000 on the bid and market order comes through and smashes it, right? This one was probably more likely an iceberg or something like that, but it's the same sort of a thing. That's an area that could harm the liquidity in that area and create a liquidity hole. but it also kind of shows you like there's somebody really willing to buy it there, and there's somebody really willing to sell it. And the question then becomes why? You know, if this guy that's willing to buy it is hedging, he's just hedging. And meanwhile, there's some guy that is executing a meta order and he really has to sell, right? Well, he's going to love having that almost 5K to sell into. Okay, that helps him. But he's still got like 30K contracts to trade, so it just goes lower, right? So when you get something like that and they go lower, it usually you get a little bit of acceleration afterwards, right? As everybody realizes that like there's a strong seller here, and that big iceberg bid didn't slow them down at all, right? Now, through all of this, I do think that we had a meta order and then the meta order stopped. Maybe now there's some sellers coming in, though. What are some of the biggest Ninja script issues you faced programming depth indicators, and why your depth-based robots failed? Okay, well, so I wouldn't necessarily say that they failed as much as it was that I determined that the results that I was getting weren't useful. So the big challenge with programming that sort of a thing is backtesting it, right? There's very difficult data to maintain, and like I was talking about, you want to make like something that will like output it and everything. And then you need to be having it going for years and years. There's Gary. Gary was messaging me on Discord a little bit earlier, and I was like, you can come back. So I was like, is he actually going to come? But he decided to stop back in and say hi. Anyways, so what had happened was I had made those indicators, and I had trained them on a certain subset of data that I had, but it just wasn't enough, right? And so then you try trading it live, and it didn't really work. So I think that some of the concepts that it was based on were pretty good, and the overall indicators are pretty good, and because you know we've used them. I try and keep my desk space minimal, so the reason I created those indicators was so that I could try and programatize what I'm doing when I'm actually watching the depth of market. So if I'm not running a robot, then I don't really need them. That's why I have them on my workspace. But, you know, so I kind of need like this greater thing. So I do think that we're eventually going to return back to that. That's what we were talking about earlier, where I want to make this whole pipeline and all of these sorts of things. And then I also think that it's missing a component of this like hidden Markov model sort of a thing. So once I sort all of those things out, then I think we can bring that back. I've been saving the data for a long time, so I have better data to run against. And then we can try it again. So I think that making the depth indicator itself, there's a couple of weird things about it, but you figure most of those out by just looking at other indicators. And I have a couple of innovations in my scripts that are really cool, but I'm not going to share with you. The problem is the data and the testing part of it, not the actual like programming the indicator or the logic or anything like that. You have to build infrastructure, which is a big project to do all by yourself. Yes, like your own black box system with systemic strategy. Yeah. Does the indicator do some of the act? I don't know. So the basic idea that it's trying to use is one, imbalance between the limit orders. or changes in the limit orders, and 2, imbalance in the sign of the orders on a rolling basis. Okay, so those are like the 2 kind of key things that we're going for. And like I said, there especially with the limit orders, there appears to be this hidden Markov model where it'll work for a period and it doesn't work for a period. And if you can figure out which regime you're in based on the Markov model, then you might be able to get it to work. And I remember some people like Goldman talking about that sort of a thing, but I didn't know what a Markov model was, and I don't think they were using the Markov model. But when they were trying to describe it to me, it's what sounds like a Markov model to me now. So that's where I say, it does seem to me that if I want to use level 2 with the robot, that you have to include some of those machine learning things into it. It's another pick. There's a few more large orders being absorbed. Yeah, well, so here's the other thing, D. On the treasuries, granted, liquidity is still a little bit light, but in the treasuries, I would say that 3 to 5 in one spot is pretty common. So I wouldn't start calling it a collision, for instance, or like a big iceberg, like a really big iceberg, until we're getting into like 7K, 10K. Why would a market? Well, okay, so so I don't totally understand what a Markov model is completely, okay? I haven't programmed it. It's kind of a fuzzy thing, okay? But here is my understanding of it, is that it's using Bayesian learning essentially to say, let's just say that we have 3 conditions. We're trending up, we're trending down, or we're range bound, okay? And then we have certain metrics, like how much we've moved in the recent past, or, there's these metrics, right? And what you do is you come in and you say, okay, based on these current metrics, what is the chance that we are in a trending up market? And what is the chance that we're in a trending down market? And so on and so forth, right? And then there's also these statistics about, okay, if we're in a trending up market, what are the chances of us shifting into a trending down market, right? And so when you combine all of these probabilities together, it can give you a reading of how likely we are to be in that particular regime. And then if the likelihood is high enough, then you can start taking trades based on that, right? And so essentially the way that it would work with the level 2 is you could say there's a regime where price moves towards the liquidity, and there's a regime where price moves away from the liquidity. And based on what we're actually seeing in the liquidity and how it's shifted, what are the probabilities that we are in that particular regime, right? And if we were a high likelihood that we were in that regime, then there's going to be somewhat of a likelihood that we're still in that regime. But then there's this certain point at which it shifts and stuff. And I think that we as people kind of maybe do some of that stuff naturally, but the Markov model can kind of reveal these kind of strange systems that are kind of going on underneath the surface that are basically too complicated for us as humans to consciously recognize. Share your 2 cents, my 5 cents, silver 5 cents on that. The most recent one? Well, that's why I was saying, this was where I was saying, like, well, you saw 5,000 trade at a spot, right? Like, if this is all into treasuries, then what this says to me is you've developed a range with a liquidity hole that there's reasonable amounts of volume trading in. You might not be seeing it trade all at once. You might not necessarily even realize it when you're watching the DOM, unless you're really keyed in, which I'm not at the moment. But, you know, it seems like that there's decent volume trading in through here, right? I don't think that it's a collision. You know, like a collision would be more like 10K and then it stopped right there, or 10K and it went through it and it'll run through it, right? And I would say collision has more to do with, like, again, when I say collision means that like a large market order was involved in taking it out. Okay. That's like when I hear that block buy sound come over, because in NinjaTrader I have it set up to be if it's like more than 3K market order to do it right. So I see a block buy come through and I hear clicks at the same time on my market depth tape and stuff, right? Then that's kind of like, okay, collision happened. Okay, so Jigsaw, when you purchase the software, just allows you to use the software for forever, right? The monthly subscription allows you to submit live orders, okay? The data, which is provided by somebody else, usually a data provider like Rhythmic or CQG through a partnership with your broker like EdgeClear or AMP Futures, okay? They can give you a data trial. And those data trials are usually 2 weeks, yes. So that's why what you should do is get the trial. So the first thing is, for Jigsaw doesn't have a trial version, right? But it does have a money back guarantee. So what people do is they buy the Jigsaw, they try it for 2 weeks, and then they decide if they want to keep it. Okay, so you get Jigsaw, you do the 2 week trial with the data. Then if everything works with the way that you expect, you open an account with that broker and you put in just, I think it amps, you can start a $500 account or maybe a $1,500 account. And that has enough money in for you to open an account and for you to pay for the data for a long time, right? And then you can start trading at Sim. No. So that's where I come back into be very, very careful about turning order flow into technical analysis, right? So are we seeing a persistent imbalance between market buys and market sells through this? Not with what you can see. There is cumulative delta has been declining. But, you know, just based on the price action that you're seeing here, I would expect the cumulative delta to be relatively flat, right? Okay, is Trade08 good? I'm gonna say it used to be better, but they've gone through some difficulties lately. It's not enough for me to say like you should avoid them or anything like that, but there has been a number of people lately that have been unhappy with Trade08. But Trade08 is an okay setup. But like Trade08, you think for what we're talking about doing, I think that in Trade08 you'd probably end up spending more money because Trade08 is like $100 a month or something like that, right? It's probably changed, but when they first started, it was like $100. $100 a month, but you don't pay commissions. So, okay. Yeah, both Rhythmic and CQ. So the thing that really affects the price is the CME. So if you're going to get CME data and you want to get the CME bundle, which is to mean that you're able to look at equities, treasuries, oil, gold, farm, like everything on the CME, that's like $35 a month, I think. If you only want to look at like equity index futures, I think it's $15. But it's like the CME charges that data fee and the data providers are required to pass that through to the customers. So the difference between rhythmic and, I mean, there are differences between rhythmic and CQG, for instance, but they're generally going to be around that price because the CME has that fee that they're required to pass through to you. How do you set CQG up on Jigsaw? So if you have a trial account, then they should send you a username and a password, and then you open up Jigsaw, and there's this connection manager. And then once you go into the connection manager, there's a place for you to select new, and you can enter those credentials in and then connect. Trying to think about look across the landscape here and see if there's been any changes or anything that we should really note. It does look like, you know, when things turned around, that was when the dollar was at its lows. I suppose it's possible for the dollar to move again here, but I'd say this is a pretty big change in the dollar today and yesterday. That's your limit offers. Well, now that is very interesting. Yeah, but that is kind of what we saw happen on the DOM, isn't it? Right? Was that when we got up there into the highs, you know, there was a lot of activity. There was a lot of limit orders out there, and then kind of sputtered out. So I don't know, is this one bids? But I would say that we had an up move. There was a bit of a distribution, right? And post meta order impact, right? Like, this is just me saying without the indicators to prove it to you per se, but just what I saw on the DOM was strong meta order, post meta order regime change, right? Maybe a sell meta order, small sell meta order here. Small sell meta order that didn't really accomplish much, and so it's kind of, when it's doing its post meta order, it's coming right back up to where it was, right? And so when we had this, I was kind of seeing like, okay, there was big amounts of volume trading. You can see there was a couple of big changes in the volume up in here. It was in this range really tight for a little bit of time. The inside bid and ask, if you looked at it, was like really low. Like you could just kind of start to see that the liquidity in that area, the market makers were taking all of the volume in that area, and they weren't really willing to take on any more. And meanwhile, the meta order was kind of like scaling back. It wasn't being as aggressive as it was. So that's why I took my profits there. It's like, I get that, and then I say, okay, it looks like we're done. Can you DAO a video? Well, I have a lot of videos on Jigsaw and my workspace and how to set it up. I'm not quite sure what else is missing. So here's the thing, I guess. Trading this way is kind of a bit of a jump, isn't it? Right? Because you have to buy like a $500 piece of software and all of these other things, right? So really the question that you have to ask yourself is this really appropriate for me? Right? So the first thing, the thing that disqualifies most people is, what kind of income do you have? What resources are you willing to put into this, right? So to do futures trading, you need to be able, you need some extra discretionary income that you can put into futures trading that you are 100% okay with losing. Okay, so if losing $1,000 is a big hit to you, like if it takes, all year to save up that much, then you probably don't want to trade live. Let's just say that's probably when you might want to stay on sim, right? And the time, because this is like you're gonna have to sit here and spend 2 to 3 hours every day. You have to be consistent every day. And then after that, you're probably going to want to spend a lot of time reading news and keeping up on the markets, right? And being obsessed about the news. So if that's not you, then it's not appropriate for you. And you have to be just really interested in the subject overall, because it's usually not rewarding in the very beginning. Like, you really have to trudge through it for years. And so if it's not just the subject itself is not engaging just for the subject. So I have a whole video about this. I can kind of go into this, like, is futures trading appropriate for you? But right. So if you ask all of those questions and you say, okay, yes, I want to trade, and order flow is a key component of the kind of trading that I want to do because I want to be involved on trading futures on a short time frame. Okay. Then at that point you can say, okay, I know the pieces that I need, and I know that this is appropriate for me. I got to pull the trigger, right? And the thing is that there are a lot of different platforms out there and ways that you can do this. There's a lot of different brokers and there's a lot of different data platforms and stuff. But for Jigsaw, the most common pipeline is basically you get Jigsaw and then you either use AMP futures or Edge Clear and Rhythmic or CQG, right? So that's all you got to do, and just pull the trigger. And the difference between all of these other different options that you have is not really all that significant for the beginner. So, just get in, start the minimum account that you can, and start learning. And I wouldn't worry so much about having to know absolutely every little detail and difference between all of these services and that sort of a thing. And the only reason why I say that is just because, like, you got to realize that, like, I've spent that time and gone over that like a trillion times over the years, to know the difference between them. I have a hard time keeping up because those services are constantly changing. And in the end, I do not find them to be a significant factor in my trading. Other than, having the best on. Sent the steady pick. What do you mean by that? See, like, well, I see that you have like a circle there and everything, but I in that footprint chart, I just don't see anything that's really all that unusual for the treasury. That just looks like pretty standard random, action that could just be random. You still see stuff that kind of suggests that you're probably a little bit range bound, but I'm concerned that you might be like getting really hyper focused on the data and trying to apply technical analysis to this data and seeing something that's maybe not actually there. Well, yeah, are you talking about this right here? Because I know that you have a little circle there. I mean, overall, there's been like a 4K difference in the market orders as we've kind of pushed down here. That's why I'm saying there does appear to be enough selling here to suggest that maybe there's a sell meta order involved in here now. See summary. I can't. That's the whole picture. My add-on. Oh, I don't see my add-on. I think you. Oh no, wait. I am. You're right. I'm not seeing the whole picture. Oh, okay. But which row is that? Which metric is that one? Yeah. No, sorry, I was a little bit behind, but yeah, I see the summary row, but which summary row is that? What's the name of that row? Okay, that's the offers. Let's see. So probably that was an iceberg, right? Probably that was an iceberg up there at the top. Yeah. I forget. That one is changes, right? Or rather like that's like how much the offer has changed, right? So it kind of looks like it had come up into that area. When it came up into that area, the offers kept adding, and so eventually price gave up and sold. Yeah. So I guess the point that we should make here is that cumulative delta is the best indication that we have of informed traders. And if there's a persistent imbalance, then we will tend to see a persistent trend in cumulative delta. But when these guys are executing large meta orders, the metrics are that anywhere from a quarter to a half of it is also done with limit orders and some market making. So what will often happen is you'll see it will come up going the wrong direction. You'll see them absorb across a range, across 2 or 3 prices. And then once that's happened, the market makers and the retail traders and everything kind of all realize that there's not enough buying to get through that area. And then that's when you start to see the more aggressive market orders coming in and start taking out the bid side liquidity behind it. Right? And by letting it come up there, fill them a little bit, and then there's all this liquidity that fills in behind that they can sell into. And so that kind of gives them a little bit more. You can kind of see how if they can get it to pop up in there and come into them, that it's advantageous for them to do so, right? But that's not always how it turns out, because sometimes the meta order is buying, right? That's why the big problem is you have to know, like, okay, is there a meta order in the market? Is there a reason for this to continue moving up or down? If you know that the meta order is there, right, and you know that the imbalance should be sell, then it's really easy to come in and say, okay, I see up there, it looks like that they've decided that this is where they're going to absorb, so now I should start to see them sell, and so I want to get short right there, right? That's when I would look for the iceberg and try and get filled on the iceberg. If, on the other hand, I saw this happen and then it's been like 15 minutes and I haven't really seen market sell orders come in, then I probably give up on the trade, because if that's really what's going on, it should go down, because it should be a meta order executing. And if I'm not seeing that in the flows, then that means I'm wrong, that maybe it was just random, right? I was wrong. The flow that I expected isn't coming through, and So looking at this again, it does seem to me, I don't know. I mean, the high seems awfully far away, right? It seems to me that if we went up to the highs, that we should be a lot lower than 3.8. So I still kind of think that original trade, I'm a little bit like, it still doesn't compute correctly, but probably shouldn't try and argue with the market about it, right? I was wrong. It was a dumb thing to do. I've kind of like haven't done those in a while. I've had some success with them, but I've gotten screwed on them as well, and so I've kind of been avoiding them a little bit. I thought that was a situation where it would make sense. I totally misread it. Probably, like I said, I'm feeling a little tired, like mentally tired this week. It's been a rough week. I've been working hard at work. The markets have been a lot going on. Like I feel like I'm thinking a lot, and it's kind of pushing my limits. And then, so I think I made a bad decision in that time because of that. But then I revenge traded and it worked out. So I guess so this is an interesting thing about Edge, because people talk about the psychological aspect of it, right? But here's the thing. If I hadn't have made that mistake, I probably could have made $50. Probably could have made $50. I made 30, right? So I'm giving up some on the outside, right? But if you really have an edge, you can be successful in spite of your bad psychology, right? I think that my psychology today was not the best example of the way that you should trade, right? Because like I said, I think kind of part of this was a little bit of revenge trading and a misclick that doubled up the trade and all of that, right? So the psychology wasn't very good. I revenge traded, but because I have edge, knowing which way the flows were likely to go and so forth like that, because we did say probably the flow should still be tilted to the long side. And I was even saying that despite that selling that we was getting. Right. So because I was correct on that part, the tilting and all of that actually kind of worked in my favor, didn't it? So, because the bad psychology essentially caused me to take on more risk in a situation where I did have an edge. So I got rewarded for it. Interesting day. Yeah, the cumulative deltas confirming what you said. Yeah, it really is. It really was kind of interesting, right? Because you could kind of see how when that distribution formed, that like those offers, there was. So the thing is with that indicator is that things like, just a lot of people adding little orders there and everything can kind of sometimes account for it. But anyways. It definitely looks like it came up and we formed a distribution and then the meta order died out. Right. And that's the whole thing, is that I you kind of create this story about what's going on in the market. And our story might not always be correct. It might be useful, but it might be incorrect. Right. But what I see with a lot of market theories is that there's like, we have information that kind of suggests that the story that people are making up in their head is wrong. Right. And the thing that I think really kind of convinced me that I had really come across really the framework that we needed was not just that we had all of this empirical backing for it, but also that when I applied that framework to watching the action, that it could fully explain what was going on, whereas other frameworks couldn't. Right? So, good stuff. No, I don't have any other requests. We have tomorrow. What, do we have any data tomorrow? I should get going. I think we do have something. Oh, yes, consumer sentiment tomorrow. So we might have a little bit of trade still tomorrow too. But given that I'm positive on the week, what is the last thing I want to do here? And I really should go is check. Did we get back up? Oh, nope, we did not. No, because I think what this does is this cancels out the bad trade from last Friday. So we're back to where we were at the beginning of last week. If I could make $10 tomorrow, then I think I'd be really happy about it. Seems like that would be appropriate for tomorrow. But overall, I think I should probably try to be a little bit more cautious tomorrow than I was today because, you know, I got a little bit lucky. That I really did have the edge because I didn't explicitly know it. And I'm probably going to be even worse tomorrow, right? So I'll see you guys then. In the meantime, stay excellent.